And moving on, there is a major development in U.S.-China trade relations as the momentum on soybean purchases appears to have stalled. After a promising flurry of orders last month, China's imports of American soybeans have significantly slowed down. And this pause is raising questions about whether Beijing will meet the ambitious purchase targets set by the U.S. government. The Trump administration has predicted that China would buy 12 million tons of American soybean by the end of the year, followed by an additional 25 million tons annually over the next 3 years. But now industry experts are casting doubts on whether those numbers will materialize. Less than 2 weeks after a high-profile trade truce between the U.S. and China, soybean purchases from China have hit a roadblock. Traders are reporting that no significant new shipments of U.S. soybeans have been booked, raising concerns over the future of these imports. Meanwhile, Washington has touted a deal in which China would purchase 12 million tons of soybeans from the U.S. by the end of 2020, with additional commitments to purchase 25 million tons annually over the next 3 years. But so far, Beijing has not confirmed these targets, and market activity is showing a stark slowdown. China, which is the world's largest importer of soybeans, has been diversifying its sources. From the past several months, it has been making massive purchases from South America and particularly Brazil, in an effort to reduce reliance on U.S. exports. The Brazilian planting season is progressing normally, and new crop supplies are expected to reach China by late January to early February. That timeline is critical, as Chinese importers are reluctant to secure large volumes of U.S. soybeans when South American beans are priced much more competitively. In fact, U.S. soybeans are currently trading at a premium compared to their South American counterparts, partly due to a price spike following the announcement of the trade deal. And despite the trade truce, China soybean crushers, the companies that processes the beans, face a 13% tariff on U.S. soybeans. This makes importing them from the U.S. financially unappealing, as processing them could lead to heavy losses. The only major Chinese buyer of U.S. soybeans so far appears to be state-owned firms, with some of the soybeans potentially destined for government reserves. Commercial buyers, however, are staying away, preferring Brazilian beans over American supplies. Now, as we head into the final stretch of the year, it remains unclear whether the U.S. will be able to meet its soybean export targets to China and whether the broader trade deal can overcome these hurdles. For now, it seems that U.S. soybeans will continue to face tough competition from South America.